Welcome traders to another video. This video specifically I want to focus on support and resistance. From the previous video where we marked up the weekly outlook and where we felt price could move to based on support and resistance, I want to go back over that because I find it really interesting having a look at the charts now after coming back. I've not traded this week because I've had kids, Easter sort of holidays in the UK. So yeah, I've just been doing daddy duties. But as I've come to the charts now to do another video, I can see here how support and resistance has played key parts in how price has moved. Although the move is mainly based off of fundamentals, we can see how the fundamentals have been backed up by the technicals and how that's played out this week. So let's have a little look. So if we look over to the side here, okay, let's get the arrow up, we can see that we marked out these levels on the last video, okay? All of these supports and resistances, and that was based off of previous data going into this week. Okay, so what I want to show you now is how, if we come down to the bottom first and foremost, because this is where price started this move going up, and how we could use support and resistance to effectively make some trades this week. If you look here, we've marked this support up and price came back down to it. Okay, it tried to break and it turned out to be a fake out. It come back in. We then marked out this zone here, which was a consolidation range, which price broke through. Okay, as it's broke through and then come back up, it's retested that level. So that support now has turned into a resistance, and for me they're great opportunities to trade, because if it's broken a support and then it's rejecting that support as now a resistance, it tells me that that is a key level and a strong level at that. Okay, so there would have been potentially some trade opportunities there as it came down. The next thing to notice, because this is where the transition happens, okay, we're on the 4-hour chart, transition happens here for price then to take this move bullish and transfer the weekly candle into a bullish candle. And I think the key things to focus on here now would be the fact that we've got some good structure to base that off of. So we had the previous high, all-time high there, and then we started to create that higher low. We've then created a lower high, and then really this has then rebroke that level to create a lower low. Okay, the key thing then is to start to look at how price reacts to these points, because we've got the lower high, then we've got obviously we had the lower high, sorry, and then we've created then another lower low. At that point you expect this to happen, you expect that transition and then continue price down. But when we get a higher low on a higher time frame, we start to consider what could price do, especially in a bullish market. And as you can see from this point here, we've just gone up. We've not even created a new higher low. So price is super bullish. Okay, just wanted to move on then from there to see what happened after that. We can see that price has pushed up, and once again we've got these levels that price has started to respect. Okay, first and foremost here, if we look, that was the top of this range. So the key thing for me here is that as price starts to move, you want to look at sort of key areas, and this area here was an area of quite tight price. We had the range there, okay, we came down in quite tight candles and range there. We've got these bullish candles that have then broke out of this level, okay, and what you want there is to look for a retest or the last kiss or whatever you might refer to it as, and that's what's going on at this point here. Okay, so once you've got that bullish candle there, we know that price at that point is more than likely going to take off to the all-time highs. But what you now need to do is to look at how you could get into some trades, okay, because it's not just going to move like that. And by looking at this, we can see here that there was respected. That was the level we marked off. Granted, it's a lower time frame, but the lower time frames will also play a bigger part on your higher time frames. We've then got this level here. We can see there price respects that level that we'd marked off before taking off, and then we had the all-time high there, and obviously that we put that slightly lower because it was a lower time frame, but you can see the price has just left this zone and then gone up to make the all-time highs. But the key thing here is to see how supports and resistances will always find their place in the market. The market has a memory and it will remember those levels, okay? So there is super important that we mark supports and resistances well, because we'll always be able to come back to them. And at these points you'd have been able to look at where you could have took trades, especially on a bullish market. You're looking at enter at supports and you're looking at where would be a good time for you to get out of that trade at a resistance. And I think we can see here how that's demonstrated superbly. Moving on, obviously we've got some price action going on here with gold. You just want to be super careful. In a super bullish market, you're going to want to go down to the smaller time frames to see what trades you can get. I'm going to end this video now because, as I say, this is more about support and resistance and how the market has memory as opposed to analysing gold as we speak at the minute. This was more about looking back at the previous video, the levels we'd marked up, and then how price had reacted to those throughout the week. Okay, so yeah, I'll see you on the next video when we do a gold analysis. Obviously, if you like the videos, please drop a comment, like, subscribe. Obviously, I know then that you guys are sort of enjoying the videos, and I'll keep creating more content, and we'll go from there. Remember, life is not a dress rehearsal. Get out there and get those pips.